Morning, everybody. It's Tuesday, April 23rd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at May corn down 3/4 at 439. May soybeans were down 1 3/4 at 11.59 1/4, and May Chicago wheat was up 2 3/4 at 573. Yesterday afternoon, USDA released their updating crop progress and conditions report. Corn coming back at 12% planted. That's versus 10% on the 5-year average and 6% last week. Soybeans were 8% planted. That's above average as well. 4% for the 5-year and then 3% last week. Winter wheat ratings were quite a bit of a shock. They dropped 5% in the good to excellent category from the previous week. Still above, though, the 5-year average of 44%, and I believe the highest rank ratings for the good to excellent category since 21. So still a better than average crop that they've seen the last couple of years. And then spring wheat came back 15% planted. That's over the 5-year average of 10% there. We did have a pretty significant rally again overnight in wheat. We finished actually quite a bit off the lows, but we'll kick it over to you, Ben, just to share some thoughts here to start the morning and then move it around the room. So,
yeah, I think that we kind of got everyone excited yesterday. It's been a while since we've seen grain markets of any sort up 25 plus cents. They did run into the 100-day moving average in Chicago wheat. There's quite a few things around the world that are, I think, slightly worrisome that the trade is gripping onto. Some dryness in Russia, wet in Europe. In the U.S., SRW, I think, is in really good shape. But KC wheat took a pretty good hit yesterday. Western Kansas remains very dry. And I think this will continue to be a trade to watch with a big short sitting in here. And, the wheat spreads have been typically you would see over most of my trading career, Kansas City at a premium to Chicago, and they're trading about even. So I think at some point this turns into maybe a little bit more of a spread trade than a flat price trade. So, looking at corn, we did see some pretty aggressive buying yesterday, fairly strong volume day above the 50-day. That's something that we got to see if they want to come back today and put together a string of days of covering. The forecast across a lot of the central U.S. is really wet. I don't think long term it provides to be something that's super supportive, but I'm sure that in previous wet years, going back to a year like 19, that early on it wasn't perceived as that as well. So follow-on weather will be really important. But at this point, that managed short has kind of watched. May, July be something that came in, and maybe there's a little bit of inkling of taking some of this off. And I'm going to put my tinfoil hat on for a second. Maybe there's a bigger trade in some of these other commodities, the metals in particular, some of the softs that have been really, really strong with a short grain trade. And it may be something that seasonally people are looking to start to unwind finally. But I do think that you got to get through first notice day and see how things shake out and after options expiration, which is on Friday. So quite a bit open in the 50s, the 40s, and the 30s. I would be shocked if we were able to extend much beyond any of that range. We've been in this 20-cent range for the better part of 6 weeks. It's been heavily traded out, so things might get a little bit loose here within that range as option positions start to get settled. People are trading down to what become real true delta positions on those options the last week. So I think there's a lot going on. Today's the day to see if we can get some follow-on strength. The 100-day moving average in May comes in at 453. We're going to be switching to July here. The volume there is surpassed May. And in July, the 100-day moving average comes in at 464. So, typically we get a strong move above the 50 and we can hold it. We try to gravitate towards that 100-day and test it out. No guarantees here, though, that that's going to be what happens this time. But yesterday was slightly encouraging. Hopefully we can not give it all back today.
Absolutely. Dustin, we saw another, a really good week of corn shipments as well, about 1.6 million. So, I mean, we've continuously seen week over our export inspections numbers surpassing estimates. Thoughts there?
Yeah, I think that's why the major life spread has come in quite a bit, and I think everyone's focused on the planting window still. Basis levels have been rising in a lot of areas, not everywhere. Obviously, people hearing this might be in the east or haven't found that are wondering, but certainly in the areas that were already tight to begin with. And it's like Justin said a couple days ago, it's like the one kind of bright thing that we're seeing is maybe there has been a little bit more of a cleanup here, and the tightness in the spread is kind of telling that story a little bit.
Oh, very good. It was interesting to see just in one piece of news this morning that we brought in our first shipment of Brazilian ethanol in the United States, going into Lanza Jet out of Georgia. And I thought that this was interesting. We were talking about it before the show. Hopefully this puts some pressure, on this administration or people over here to start, making some changes or getting this thing figured out so that we can participate in this market instead of, bringing in foreign ethanol. Just thought I'd kick that around the room a little bit this morning.
Yeah, I mean, we've talked about this, right? Just, we have such an aggressive biofuels policy and a lot of subsidies, and we really shouldn't be subsidizing other countries' product to hit our mandates. If we're going to try to support American agriculture, and I think that's something we're going to have to do, as acres and acres continue to come into production in South America, we can't just subsidize other countries to grow at our expense. So.
Yeah, it's like what China did, right? For years, they had the government support program for the auction price, and they had to literally block out all import of other corn because it was an arbitrage.
Yep, for sure, and it'll continue to happen. So,
yeah, I mean, if you're national corn growers or some of these organizations, I mean, you got to be you got to be freaking out. Like, let's take.
Well, I'm sure they are. I'm sure they have been. It's loopholes and things like that to close down, but yeah, I mean, you can go do E15 all you want. If you're going to import it to use it, it's not really going to help us, right, except for expand more acres somewhere else probably. I was going to say, Ben, I was going to add on to your wheat comments. I do agree on the spread. It might be more of a spread play. One of the reasons that I was just looking 11 months ago, Kansas City, the May contract actually made highs against Chicago at $2.60 over premium. And if you guys remember, we did a whole bunch of business to China out of the blue, which we couldn't really kind of scratching our heads on why they bought so much soft red wheat. So that drove that spread all the way down to almost even money a couple months ago. Now we're sitting at 25 cents. So relatively historically small spread, but I think that was the reason. Then we started canceling cargoes to China. So it's kind of a really weird circumstance, but I guess I agree that, to see that back at $1 plus over would be just kind of a normal type relationship, as I'm concerned on the spread. So I think that makes a lot of sense. And I agree too on, I think you started seeing 475, you started seeing some of those big resting orders in new crop corn last night, so I think you're going to run into farmer selling, especially in areas that are getting planted right now, probably in that $4.75 to $5 range, until something really happens with weather, or if it does. Right now we're just getting, in my opinion, getting rains in the areas that we were worried about a big drought. So yeah, it slows down some progress here and there, but it's also probably a net benefit unless it, obviously turns into a 2019, which I've only seen that once, and I don't know if anyone has in a long time that's been trading. So it's hard to plan on that. Right now, my fear would be 2-3 weeks from now, you get done planning and everything, subsoil is looking a lot better, that we could have some more headwinds again.
Yeah, it's getting most models are showing warmth too. So you throwing water on it, getting it in the ground, it's going to look, you'd look 3 weeks from now and things are going to start coming out of the ground pretty good, Yeah,
so just got to keep that in mind. I'm kind of friendly corn right now with, every time we break, we seem to run into demand and funds are short and all the things that we've talked about, but it is almost May 1st. So scary how close we are to, usually June, early June's when you're kind of putting the highs in for the year. So not talking about a big window here historically of when the market starts worrying about too much supply again. So just want to keep that in mind with, as we put strategies together. And, I know we've been talking more about, D's 25 and D's 24 and working orders. And I think it's important to have those in because the spike could be, especially if you break through some of these moving averages like Ben talked about and you get some forced short covering, you could have a bigger spike than you think, but could be pretty quick. So I think it's good just to really run those numbers and have good orders in.
Yeah, and reestablishing some of those plan A's, plan B's that guys have gone through, and being on the forefront of it, especially as they're getting busier and these things are moving, it's even more important, right?
Yeah, and even like November beans got over 1180 by a couple ticks last night.
Mm-hmm.
Yeah, I think looking back at $12 beans or in that ballpark, we've been harping on beans a little bit, but I still think that could end up looking like a fantastic sale. Beans, the one thing that isn't going for them is demand right now. Obviously, crush has been good, but exports, new business. If you look at new business for 25, I think we have maybe literally 0 on the books, which is very rare. So they're just not aggressive at all forward purchasing. They went through where they had to buy it from us with the Argentine drought and some of those issues, but those crops are big down there, and I think the risk is that our acres could pick up a little bit here on the beans. So I would just remember kind of $12 beans and $5+ corn might not be the worst to have some strategies in place.
Sure. Well, that's a good point. A couple minutes coming into the open here, Ron. We started pretty strong there yesterday, post cattle on feed. What's your thoughts as we've gotten through Monday and the rest of the week here in livestock?
Yeah, I think now that we've digested the report, the price action was really good yesterday. I think just the fact that it wasn't a bearish report really kind of helps spur some new buying here. Plus, it just kind of reinforces this notion that we get into the next kind of half of this year that we're still going to be historically tight number wise. So I think you got the bulls kind of back in full force. Open interest was up 1854 on the live side of things. Was down in the feeders, so kind of felt like we saw a pretty nice amount of short covering there to kind of help propel us as well. But we're closing in on some of these really important moving averages on the live side. June's closing in on the 40-day moving average. There really hasn't been any cash trade to speak of so far. Maybe we got a little bit of optimism on the board, but it doesn't seem we have a real upfront cattle supply problem right now. So it's kind of hand to mouth right now, I think, for the packer, especially with slaughters being came in at 113,000 head yesterday. That's pretty low. So it just kind of goes to show that there's still going to be quite a few headwinds between the packers trying to control, the flow and the pace of slaughter, as well as, continuously high carcass weights here. So I think those are big issues that the market's still going to have to deal with in the interim. But yeah, the price action is really good. We've seen this move, the move kind of straight up. So hoping to see some follow through, but I wouldn't be surprised to see, maybe a little bit of resistance here of some of those moving averages.
Very good. Any reports to keep an eye on here, or what do we got in the way of upcoming information?
It's nothing yet. We'll just wait to see what they say next month on the next month's cattle on feed report, quarterly hog and pig. Going to come out at the end of June.
Okay, perfect. Coming into the open here, we're slated to open pretty much right in line with where we closed overnight. We are streaming live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate everybody's thoughts and comments here this morning. If you've got any questions, looking for opinions or thoughts on your marketing and where you're positioned for this year, please don't hesitate to reach out. Love to visit with you. So hope everybody has a good day, and we look forward to talking to you tomorrow.
Thanks.